There you go. We're live. Welcome, everybody, to this offline educational. It's a discussion on maintaining consistency once you achieve that level. Welcome, everybody. I'm James. We have other members of the trading community on board. Everyone is free to unmute and speak. But I did prepare a couple of notes that I'd like to issue first, if you like, as thoughts for guidance. And remember, what we're here to do is discuss maintaining consistency once you achieve that level. So in my notes, I've written that we have rules and we have a plan. Our rules and our plan must be drawn up in a way that best serves the purpose of protecting our capital. We have emotions, and I speak often about keeping a finger on the pulse of how you are feeling. I firmly believe that discipline, or indeed the absence of it, leads to traders falling or straying from the path of consistency. We make choices each day, as does anyone in any other business whatsoever. Good choices lead to consistent results. All of the necessary support and documentation is available to our groups and in our groups. If you haven't got it, one has only to ask. But so many suffer in silence and go without help. I never know why that is. That's the reality. We're here as a group to help. So for what reason? Should be the bigger question maybe here. For what reason? Why do you suffer in silence? I so often see questions from seasoned group members asking for settings. What settings is on that color of that line, for instance? And oh, my word. It's not that that's a terrible thing, but if you're a seasoned member, you do know those settings. So it's kind of sad to read sometimes, disappointing even, especially when everything is so readily available. To me, it shows, but a lack of efforts, and in trading, the efforts required are minimal at worst anyway. A large decider of your success as a trader will depend on your ability to adopt procedures that allow best results. And I've got some points here. I did only have 5 points, but then a question from a member meant that I added another. So we've 6 points here. Point 1, have your clearly defined rules written and printed. Check them off when you're journaling. Did I do that? Did I do that? Did I follow that rule? Tick it off when you're making your journal. Rule number 2, or point number 2, have your daily trading plan printed and pinned up somewhere in your office. You can see my office is just a log cabin in the garden. I ain't anything special. I'm a regular Mr. Average. Obey the rules of that trading plan. There's a 3-strike rule. You have 3 strikes, take a break, stop, put it down, walk away. Then you can't lose more than you should. Have a maximum daily profit and loss target or allowance. Hit it, walk away, and all. That's it. 4, limit the number of markets you trade and limit the number of trades you allow yourself to take. Point 5, remember what you're looking at or to get into, or the direction you want. In other words, simply focus. There's a process. You've done your trading plan. You've looked at where you want to go for the day. Oh, it's done this. It's hit that line. There's bullish divergence here. So I only want to buy it, or I only want to sell it. And so many times I get in someone's journal, I only wanted to buy it. And then in the journal, it's I bought it, I sold it. I bought it, I sold it. Where did the sales come from then? That was not in your plan. Lastly, point 6, remember the settings of your strategy and don't mess with it. I got feedback today from someone who says, I started out, I messed with the strategy and I lost 23 pips. And then I put my head right and I made 100 pips, finished the day with 77. That'll do. That's what I'm looking for. You realized you were messing with it and you stopped. The science behind this, it's not about building a body of known facts, not for us anyway. It's a method for us to ask awkward questions and subjecting them to a reality check in order to avoid our tendency, or sometimes your tendency, not you specifically, members of this chat now, but you might be watching this, and yeah, your tendency to believe whatever it is that makes you feel better. The big question to be asked at the end of this is, do we have the contents of a recipe for sustainable growth and consistency? Excuse my tongue. I never say I'm better than others. I'm nobody. But I just get on with it, and I show people live in the sessions, then they work it out for themselves. Now, I'm wide open to questions, thoughts, comments, feedback. I'm happy to sit here till like 7:45. It's 7:25 now, so we've got 20 minutes plus, and I do have a sort of final paragraph that might be the end of all endings, if you like. But first, any thoughts on the statements I've made so far and the points I made, the points 1 to 6? Anyone got any input? Did you like it? Did it resonate? Did it validate? We have no chats, but I'll keep an eye on the chats as well. Open it up, but unmute rather than speak. But that's what we're here for. Feedback. That's what we want. The one particular guy, yeah, he's on. So come on, you're here. What did you think of that?
Yeah, I mean, personally, for me, James, I think it is a lot of trading about trading. Is consistency is finding what you're comfortable with and sticking with it in consistency.
Okay. And do you feel it's a recipe or a magic word? Because I've got the magic word coming up. It's perhaps a little sentence, one word really. I've got a magic word that I'll say at the end of this in my last paragraph, and it might resonate with many. But what I'm looking for is a reason why people might not be consistent, how they might maintain consistency. I do have one. Have you guys got any further or any input for that?
I would like to ask, with your 3 strikes and you're out, even if you've taken a rogue trade, a late trade, you didn't come out when you should, but it was a winning trade and you've walked away with pips, do you still give yourself a strike for that?
I do. Yeah. You guys were on with me not so long ago in a session where I took multiple entries, didn't I? And I said, or I did something daft. I remember you were on it because I said, I'm giving myself 3 strikes for that, but it's okay. I'll bank the pips and I'm happy with the pips I've got, but I'm not taking any more trades because clearly the Al Noggin's not in the game. 3 strikes. Yeah. I take the break. And if it's only, there's a morning, an afternoon and an evening. So if that was the morning, I'm happy to have another go in the afternoon. If it was the afternoon, I'm happy to have another go in the evening. But once I've had me 3 strikes, I made pips on those strikes. But that's it. I'm done.
Yeah.
What are your thoughts, Gary? I think you're muted.
How's that? Is that better?
Much.
Okay, yeah. Sorry, I've put the microphone on the headset rather than on this little thing up here. Yeah, no. The difficulty, I have 2 issues with my consistency. One is I follow the signals, and invariably it's a pullback, from a push, and I get slammed, and I also stay too long in a trade.
Okay.
And 2, I get out far too early, and that's because I keep struggling, I think is the word.
Usually the people who exit too early, if you're not checking for divergence, if you're not checking for the pivots, that will get you into some that are going the wrong way. Counter trend or pullbacks, or it's had a big move, it's going to pull back, or a big move and it's going to pull back, and you're looking to get in after that big move. Then when you are up a few pips, you bank it and it's still going. That's where follow the yellow brick road,
right?
More so that people could just follow the yellow brick road. And I've said on a couple of occasions, many probably, that there are more than 2 types of trader. But to achieve consistency, if we look at the major two types, we've got the one guy who is pure technical. That's a signal, I'm having it. That's a signal, I'm having it. That's a signal, I'm having it. That guy will take 50-50 winners and losers. And if we look at the feedback from Lee not so long ago, he took 42% winners only. That means he was having 58% losers, but he was still up 77 pips on the week. Right now, that's very mechanical and great. We need that, but you need a strong mindset then, because you might have loss, and it might be loss, win, and you've got it all back. That's that kind of trader. The other kind of trader is the cherry picker, and he will cherry pick, as in no, oh, that one. And you've seen me on the sessions. No, not yet. I need that to come back and kiss the line, and then I'm having it. And many times on those sessions, we've seen that. I'm a cherry picker then, obviously. But we will do that all day session at some point where we just take every single on one market on the Follow the Yellow Brick Road. I think that'll be a big eye-opener for many.
Yeah, I'm actually going to switch to Follow the Yellow Brick Road and candle and candle to candle. And
Okay.
as soon as, and I'll let you know how I get on.
All right. In accordance with that, it's wise to pick the right market for the right time of day, and to check the news, and to do your due diligence in terms of, we do check the higher time frames, don't we? Make sure you've done those few steps. You're not going to go wrong.
Yep.
Well, sorry, James. It's Mark here, Rory. And just I missed all your gems to start with.
No worries. It's being recorded, so you can catch up.
So, listening to a bit of it, I struggle with consistency. I managed to have some stonkingly good days and then some awful days. I trade for really good periods and then have awful ones. Okay. When I look at my stats over a long time, they're about 45% winners, usually bigger winners than losers, except for losing periods when the losses seem to rack up and I let them get too large. So lots of things to work on. And listening to what you were saying, I often get the general direction of the market wrong. So I've been trying to learn, and it worked well the other day, what Tom Hugard said he had to go and learn. If you start trying to short a trending market, you've got to very quickly turn around and start scaling into that trending market.
Yeah.
So at the end of the day, I know shitloads, but it still doesn't help me make a decent amount of money out of it. So hence the question.
Well, I put on screen there the notes that I read out, so you would have missed them. I read this little statement here about keeping your finger on the pulse of how you're feeling, the rules, the trading plan, the settings on strategy and things like that. And then there's these points: have your trading plan, follow the trading plan, and obey the rules. And some of the rules include: don't move your stop loss. Not against you anyway. By all means, if you're in a long and you're moving it up to the flat bits or wherever you're moving it to, great, move it up. But never move it down so that it's going to cost you more. Never delete it. Always have one. And then point 3 there, have a maximum daily profit and loss target or allowance. That's quite massive. It's like the 3 strike rule in the trading plan. If I have 3 mistakes, and you all know it's true because I made 3, I think it was multiple entries, but I considered it 3 mistakes and I legged it. Literally, I said, that's it, 3 strikes, I'm done. I won't take any more trades. But if you're going and you haven't made them, it is still long, and we were looking at a move up. So I sort of managed the move up. Do the same with a daily profit and loss target, and make it for sessions. So maybe you trade morning, afternoon, and evening. And sometimes we do together, don't we? So if you've blown it for the morning, stop. Okay, maybe your maximum loss is 15 pips, maybe it's 10, maybe it's 50. But once you get there, you're done. Maybe your maximum target is 25, 30, 50. Once you get there, just stop. If you can say, oh, my maximum target's 30, you've got 25 locked in, it suddenly jumps to 40, lock 30 in, that's okay. but let that be your last trade. If it carries on more than 30, 40, 50, 60, and you can lock in 10 pips behind and end up taking 70, 80 pips, great, let it run. However many pips you come out with, stop and let that be your last trade. There is such a thing as burnout. There is such a thing as greed, and it is a problem. There's just one more pip. There's always time for another last minute, but don't be for want of a better word, don't be a dick for a tick. We use that language, I'm afraid. And then limiting the number of markets you trade, or limit the number of trades you place in, or allow yourself to place, can help that. I did read a comment from a member that might ring true. Would you, demo or not? Somebody wrote in one of the chat groups there, oh, I've just opened an account and there's an open trade from 1900 and never again when I placed it and forgot about it. How do you forget you've a trade on the go? How do you forget that you had that account with a market and an open trade? That's a thing, and it's a problem. And, we've seen in the Trading Code 4, the bloopers section, I wrote the comedy of errors, didn't I? And there's one in there, particularly that beggars belief, where, okay, it's below everything or it's above everything and you sold it, and it's below everything and you bought it. And we're thinking, well, how do you not know that? You do know that. It's written up in the trading strategies. It's there in the videos in YouTube. And I accept there's only so many that are free, but in our group, every single one of them is accessible. And if there's something you've got an interest in and you can't find it, you ask, I'll find it because I've got a spreadsheet full of the links, and I'll share that individual one with you. So the resources are there. Realistically, the resources really are there. It's how we use them. It's how we use ourselves. I remember, Rory, you were in, I think you were in Heathrow. Remember we did a thing at Heathrow because Nick was over from Thailand and David was here from South Africa. They were both in London. How could we not get together? So we had the thing. Do you remember Rob Simpson?
Yeah. Do
you remember the speech he gave?
Yeah.
There you go. He reached out late, okay, but better late than never. Do you remember the conclusion was that I'm finally glad I reached out because, together we got it all back. I told him, now this is how we're going to get it back. And it was strict. It was disciplined. It was a text message in the morning before you start and a phone call at the end of the day when you finished. And let's see what you did. And he hated me because I was telling him, and now you've got to withdraw. But then I'll be going backwards. But you're putting the money out of harm's way. Withdraw and you trade with less and you're safer because that money is not at risk anymore. It's in the bank. For me, it beggars belief that so many people, they come on with, I've got an account with 450,000 in it. I'm made up for you. I've got a bank with money in it. I won't give numbers, but I've got a bank with money in it. And in my broker account, I keep enough to trade my maximum stake per pip and all. That's it. As it goes, more, withdraw. 2 withdrawals a day you can with most brokers, or if you can only then do 1 a day. But if you're keeping more in it, what's that for? What's it there for? Your broker account isn't a savings bond. It's never going to give you interest. While it's in your broker account, it's at risk. So we use the business plan, the trader business plan, and we take from the broker account withdrawals into our bank. Now it's realized profits. Only when we withdraw it, for me, is it a realized profit. Yeah, okay, you've got to win. It's only, as an accountant, it's working capital until you withdraw it. Not worth a carrot until you take it out and stick it in the bank. Now it's yours. And you might not spend it. It might be surplus. It's still building up there, safe in your bank. That's another level, if you like, of consistency. Remembering that what gets measured gets managed. And if you're seeing your bank balance grow week on week, month on month, every day, however often you do withdrawals, if you're seeing your bank balance grow, you know you're doing the right thing and it makes a difference in here. But it only works if you withdraw it. Otherwise, so many of us So many of the traders that I know use it as a working capital. And remember, on the broker statement, it says, don't trade with money you can't afford to lose. If it's in that account, you think it's money you can afford to lose. And it isn't. I see there's chats there. Sorry, what was the well said? Oh, no, it's popping up on another chat. I don't have the chat open. So, I mean, not that chat. You know what I mean? But I don't know if you're in here or what, you guys. Is that for this? No? Okay, it's something else. Sorry, fair enough. Sorry. I do like to keep an eye on the group chat.
No, it's the group chat. It's the group chat.
Oh, yeah, okay. So what are your thoughts on that, Rory? No? Okay. I'm guessing you're busy or muted or something. Has anyone got anything else to add? Do we have Dave?
Sorry, that was all good stuff, James. Thanks. But I was just saying, in order to withdraw regularly, I need to start making it more regularly.
Cool. Yeah, I've got another one for you at the end. I was looking for someone specific here. He isn't logged in yet. I did send him the link, but he hasn't got it. There's a Dave, and the Dave is one of our, I don't want to offend him, American, Canadian. He's that side of the water. Sorry, Dave. Right? Dave took a $50 account to 500, and then he withdrew money and he built it back up. Now he's taking the $500 account up to 5,000, and he's well on the way. That's the reality. That's some return on investment. We know many people who've done that, and they've shared it in the group. I was hoping, what's his name? Bradley. He asked to be added back into the group, and I did, and he hasn't read any of the messages. But he's one of those guys. He made something like 85,000 in a few months off of one particular trade. It's very, very doable. And the difference between a guy making $1 million a year and a guy making a consistent $5, €5, £5 a day, the difference isn't the strategy. It isn't the technical skill. It's the mindset. It's this is there to be done. And once you get to a specific level, it doesn't really matter. It's just numbers after that. So long as you withdraw regularly, you're measuring and you're managing the process. Them's would be my views. And we're pretty quiet here, so I'm going to make that little statement, the final statement or final paragraph I was going to say. And the final paragraph it's really about one word, and I think it's the difference. I think many people might find that this one word is the difference, because so often, particularly in book 4, when we read the bloopers, or in there was one particular YouTube recording there where someone and I got into a very heated debate. He was looking at the Rapids, and he was selling where he wasn't allowed to sell it. They were buys, and then he was wondering why he was losing. And I lost the head. And if you're not going to read anything, if you're not going to watch anything, well, that's on you. So the word I'm going to use is responsibility. We must all take responsibility for our actions, every single one of us. There is so much, it's so much more rare than you might think. I hear, and I'm reading this because I wrote it and I thought it was clever, so that's why I wrote it. I hear so many excuses, as if excuses are really valid. They're not. They're excuses. It's, oh, I'm sorry, Mum. Yeah, I broke the window. I was playing football in the garden. Oh, yeah, like Stacey and I got into, yeah, sorry, we ate the Kit Kat. We're making excuses. We should have just lied and said we didn't eat nothing in the cabin, because she comes out here, we have sweets here. But yeah, you know, we should have lied. That's it. I took responsibility, and we both got yelled at, and it wasn't fair. It should have been just me that got responsibility. At least I took the responsibility. That's the difference. Take responsibility. There's so many times, but there are times the market will screw you. But in reality, it's your choice how you react. You can go, oh, no, I got a loss. Oh, I'll take another one. Oh, and another one, and another one. What happened to the 3-strike rule? What happened to the, what did we say, a maximum loss allowance for the day? What happened to those things? That's it. It's your choice how you choose to react. Taking responsibility means you know you are the main player in your life. You're in control of everything here, of the trading, of the withdrawals, of the deposits. You're in control. You're making a choice, and it is your choice. And it means you might feel all the pain, but you have all the power. Very few people will be brave enough to take responsibility for failing. And I'm reminded again, and I'm going to say it, book 4, the bloopers section, where it was written, oh, does anyone know why this happened? Yeah, it was below the line and you bought it. What's wrong with you? You drew a big, fat, rangy box and went and traded anyway. That's what happened. And you know it. So, yeah, of course, it got into the bloopers. There are things in your life that are outside of your control. Trading isn't one of them. Responsibility for failing, yeah, that's you. That is it. That's it. Trading, that's all on you. Responsibility is yours. Own it. If you lose in the market and you feel sad, if it makes you feel better to blame something, well, okay, but that's pretty tragic. That was my last word on it. If it makes you feel better to blame something, that's pretty tragic. What are our thoughts on the responsibility paragraph?
Powerful, mate. Powerful.
Cool. I think that kind of stuff will make a difference to consistency. Take responsibility, own it. And then remember, in our sessions, I've got the GU open in the background here, because sometime like June the 22nd, we're in July now. We talked about it breaking above 128.50. I've got an hourly chart on here. Look, it tested, failed, tested, broke 128.50. Where are we now? We're nearly at 130. We've been to 130. It's 150 pips up from the 128.50 that we discussed way back in June. So what really is the excuse for missing out on these things? I hide these things in our sessions. I hide them on YouTube. I hide them in the notes, in the chat groups and things like that. So hide is a kind of a skit, really. It's right there for everybody to find, and it's right there for everybody to do. And I think it was Bob, if Bob's on. No, but Bob's been with me since 2018. And in one of the sessions recently, I asked, have we ever had our bottoms handed to us on a silver plate in one of my sessions? I mean, legally, as in, yeah, it's going to do this, and it's done something else. And I've said, oh, well, we'll hold that. No, let's stay. No, we haven't since, 2008 and before, because I've been recording it since 2017, the results on these sessions. If I'm looking to go long and it suddenly falls off, well, I'm staying out of that. That wasn't expected. It's not doing what it's supposed to. I'm not touching it. I'm keeping my powder dry. But if I'm looking to go long and it gives a signal, I'm all over that. And I'm taking the pips. And as we are all, because we've been well warned it's coming. The GU on screen right there, right now, is a class example of something like, okay, some of the members are all over it. I missed it. I'm not on that one. But great. It's not one of my main focus items. So long as someone's on it in the group, I'm a happy camper, because that's what I'm here to do in the group. Help, guide. Thoughts?
Yeah, 100% agree.
Thanks, Ben. Thanks. Go on then. I leave it there. I hope there's enough in it notes-wise. I'll share the YouTube recording as soon as it's available. Thanks, Rory. And then you can give me feedback in the group later. I've left indicators off screen because I am going to make this one public, but it's your feedback, you in the group. That's what I want. I want your feedback from this, because it's designed to help you to become solidly consistent. That's the aim. I'll end the session here, and thank you all very much for listening. Thank you very much, those of you who contributed, for the messages. Thanks, Jason. And for speaking up. Thanks, everybody.
Yep.
Good night.
Thanks, James. Bye-bye.
Thank you.
From the next live one. Trade safe.
Good night.
Cheers.
Thank you.
See you later. Thank you.
Cheers.